What is up, ladder climbers? Antoine Wade here from Elevate to the Unknown, the Wade Report and NextGenHeights.com. And it is Tuesday, March 3rd, 2026, 7:30 a.m. Central, and we are live on the Daily Climb. I got one number for you this morning, and it changes everything. 70.5. That is the ISM Prices Paid Index, released on yesterday. The highest reading since June of 2022, when inflation was at its peak. Crazy, huh? That's the number that we're going to be talking about today. In the same report, manufacturing employment is contracting at 48.8. Let me say that one more time. Prices are surging. Jobs are shrinking. That is not a number on a chart. That is your grocery bill. That is your gas tank. That is your paycheck. And if that was not enough, yesterday the stock market showed us two different economies on the same day. Northrop Grumman went up 6%, hit a 52-week high. Norwegian Cruise dropped 10% in a single session. Defense stocks hit all-time records. Cruise lines crashed. Energy companies surged. Housing companies dropped. This is not a pullback. This is not a correction. This is a split. Two economies running at the same time. And where you position yourself this week determines which one you end up in. Today, we are going to be breaking it all down. The ISM data that nobody is talking about. The block copycat wave that is spreading and going to continue to spread. Defense contractors hiring at a pace that we have not seen in 20 years. In the data that says this is the hardest job market since 2009. This is the Daily Climb. Let's look at the data. But before we look at the data, I got to see who's all in the house. We have the Life of Cam in the house. Good to see you. We got Sandra's Moving. We got AOC2 in the house. We got Big Suggs. We got Aisha Builds. We got Topaz in the house. We got Douglas Robinson, SPN in the house. Good to see you guys. ARDS7 is in the house. Good to see you all this morning. Aisha Builds is in the house. I love it, guys. It's going to be a fantastic show today, okay? Hope you guys are ready for the A show. It's going to be a good one. Let's go ahead and jump into it, okay? Before we get into the layoff wave, before we talk about who is hiring, I need to show you what happened on Wall Street on yesterday, because Monday told us two completely different stories, and you need to understand both. All right. So here's what happened. The Dow opened on yesterday morning down almost 600 points. Panic all over the place. Panic because of the war that's going on in Iran. Whenever there's panic, there's opportunities. But there's fear that the Iran war headlines, all that was hitting overnight. And then something happened on yesterday. The market staged the biggest intraday recovery since November. And by close, we were back up. The S&P 500 closed at 68.81. Basically flat after being down 2% at the open. NASDAQ actually finished up 0.35%. NVIDIA up 3%. Microsoft up 2%. But here's the thing. That recovery was not broad-based. It was led by two lanes. And those two lanes tell you everything. Lane one, defense. Defense. The defensive stocks, guys. Northrop Grumman, up 6%, 52-week high. Raytheon, RTX, up 4.7%, 52-week high. Lockheed Martin, up 3.3%, AeroVironment, the drone maker, up 11% in a single session. And the ITA, the Aerospace and Defense ETF, it hit an all-time record close on yesterday, all time. Lane 2, energy. Marathon Petroleum up 5.9%. Exxon up 1.1%. Chevron up 4%. ConocoPhillips up 5%. Oil above $81 a barrel. Third straight day of gains. Super tanker shipping rates hit $400,000 a day, an all-time record. Now, flip the coin. Here's the other economy. Norwegian Cruise down 10%. Carnival down 7%. D.R. Horton, the home builder, down 3.7%. Builders First Source down 4.7%. Airlines dropping. European markets down 1.6%. Germany down 2.6%. Japan down 1.35%. I want you guys to type split if you see the different economies forming right now. And one of our own ladder climbers called this on yesterday. Before the market opened, they dropped the energy play in the chat yesterday morning and called it. Marathon Petroleum finished up almost 6%. This is what happens when you watch data instead of watching the news. Now, let me update you on oil real quick. We covered the Iran situation a good part of yesterday. What is new this morning is Brent crude is at $82, up another 5% overnight. 150 plus ships are still stranded in the Straits of Hormuz. Vessel traffic down 70%. And here's the one that should scare you. Insurance companies are canceling war risk coverage effective March 5th. That is 2 days from now. If you cannot insure a ship, you cannot move oil. If you cannot move oil, prices keep going up. If prices keep going up, everything that you buy gets more expensive. And the Fed cannot cut rates to help you. Now, here's what this means for your career. I want to share a video with you guys this morning. Check this out.
Airlines and NVIDIA. First up, let's look at Lockheed Martin, Northrop Grumman, RTX shares, and all these stocks. They're spiking after that dramatic military escalation in the Middle East and the attacks on Iran. These companies, some of the U.S.'s main contractors of air, missile, defense, strike capabilities. Lockheed's F-35 fighter jets, which were involved in the Iran campaign, they make up 26% of that defense contractors' net sales. Growth in defense spending, of course, has been a key policy of President Trump's second term in office, with analysts saying demand in the sector could expand to the Middle East as tensions continue to rise. And those stocks, by the way, have already performed very well under his tenure.
So here's the career map. If you have a background in defense, intelligence, cybersecurity, energy, this is the moment to activate your search. Security clearance holders are in the most valuable labor category in America right now. Lockheed Martin, Northrop Grumman, RTX, L3 Harris, General Dynamics, Palantir, all actively hiring. My man, The Life of Cam, dropped the jobs report on yesterday in the Patreon. Guess what the majority of those companies were? Defense and aerospace. One of our community members said in yesterday's chat that defense AI engineering sounds exciting because he already is studying AI. That is what positioning looks like. He did not wait for today's so. He saw the signal yesterday and moved. And on the other side, airlines, cruise lines, residential housing, retail, those sectors are under pressure. If you are in those lanes, start building your bridge to the other side now, not next month, now. All right. This is what the stock market is telling us. Now, let me show you what the factory floor is saying, because we got to go to the factory floor. The factory floor tells us a whole bunch of information a lot of the times, right? Sometimes you don't understand exactly what that data is telling you until you get down there and start talking to the people. Okay? Well, we're going to the factory floor right now. The Institute for Supply Management released the February manufacturing data on yesterday. And the headline says expansion. PMI at 52.4, second straight month of growth. But the details are alarming. I want to share a video with you, okay? Check this out.
First up, though, busy day for some manufacturing surveys. Let's get back to Rick Santelli. Hey, Rick.
Hi, Carl. Indeed. Now, these are the ISM PMIs, and these are fresh February reads. On the headline, manufacturing expecting 51.5. In the rearview mirror, 52.6. We come in at 52.4. And if we look at prices paid, we'd rather have these go down, but zoom, 70.5. Well ahead of the 60-ish. We're looking for 59 in the rearview mirror. 70.5 would be the warmest since June of 22. And if we look at new orders, 55.8, better than expectations, but lacking in terms of sequential. 57.1 in the rearview mirror. 55.8 would be the weakest since Dece of last year when we were sub 50 at 47.4. And if we look at employment on a week where it's very key, we get the big jobs report this week. Well, 48.3 expected, 48.8 better than expected. And
we're going to talk about the jobs report on tomorrow. Gave you guys a little bit of a preview. Okay? But here are the numbers, the two numbers that matter. Number one, prices paid, 70.5. That is an 11.5 jump in 1 month. From 59 to 70.5, highest since June 2022 when inflation was at its peak. Steel prices are rising. Aluminum prices are rising. Tariffs flowing through the entire supply chain. And now you add $82 oil on top of that. Things are getting expensive. Number two, employment. 48.8. That is below 50. That means contracting. That means shrinking. And here's a line from the ISM report that should stop you. 45% of the manufacturers that they surveyed said managing headcounts is the norm, not hiring. Managing headcounts. That means holding off on filling open positions. That means doing more with fewer people. That means the machines are running, but the hirees are not coming. I want you guys to type trapped if you feel the squeeze. Type trapped in the chat. Okay? Now here's where it gets interesting. There was one bright spot buried in the ISM survey. One manufacturer said something that I want you to hear. They said, and I am paraphrasing, over the past 5 years, we've spent thousands trying to attract new employees and had almost zero responses. But in the last 6 months, we have been able to hire experienced engineers, CNC operators, and young people who want to become CNC machinists. Read that again. 5 years of trying to hire, almost zero responses. Now in 6 months, they are filling roles. That tells you something important. Skilled trades are in demand. CNC machinists, welders, industrial automation, robotics maintenance. These are the roles that factories need but cannot replace with AI. Ain't that something? You guys are starting to get the news, the data now. You're starting to understand where a lot of people need to position themselves. I want you guys to check out this video real quick.
It's great to see you. A lot of really interesting, maybe surprising findings in this survey. I want to just go straight to that price component. 70.5 for February. These tariffs have been in place for a while now. What changed that caused that big jump, do you think?
It's a great question. 11.5. I mean, a double-digit jump is big anyway. This is really, really big. I have found nothing about the timing of it, and it's a mystery to me. What's interesting is that we are still in an expansion area. We're a bit down from last month, but we are still in expansion, and really, at 52.4, it's not much in expansion, but it is there anyway. So prices, interestingly enough, when you think about the sectors that are expanding, we always talk about there's 18, but there's 6 that make up 72% of manufacturing GDP. Food, beverage, tobacco, and petroleum and coal products are the 2 that are not in expansion. We'll see if that changes. And prices, as you mentioned, Julie, 20% comes through that area of the world. We will see if that puts petroleum and coal back into expansion. It hasn't been there since September when it was finally in expansion after a period of not.
Let me connect this to a bigger picture. ISM prices at 70.5, PPI core at 3.6%, oil at $82. Okay. The Fed wanted to cut rates this year. The market started the year expecting 4 cuts. Now, the market is pricing only 1 to 2 cuts for all of 2026. What does this mean for you? Well, mortgage rates stay at 6%. If you were waiting to buy a house, that window is not opening anytime soon. Small business lending stays tight. Consumer spending gets squeezed. Gas going from $2.85 to $3 plus. Food prices still running hot. The economy is not crashing. It is squeezing from both sides. Prices going up, jobs going down, the Fed stuck in the middle. Okay? Factories are making more with fewer people. And corporate America just got the exact playbook to do the same thing. Let me show you, okay? Stay with me on this next segment. Last week, we covered the Block layoffs. This is the same company that makes Cash App and Square and all that other stuff, right? They cut 4,000 people. 40% of the workforce gone in a single day. What is new this week? Well, it's week 2, and the copycat wave is live. Block stock closed Friday at $63, up over 20% from the announcement. And then TD Cowen raised their price target to $95 with a buy rating. Go and get yourself some Block, guys. They said the workforce reduction lifts 2026 operating income guidance to $3.2 billion, up 19%. Wall Street is not just tolerating these cuts, they are rewarding them. Check out this video.
Anxiety high in the financial space today, as you know, so too within the American workforce. Now to McKinsey on Block cutting almost 50% of its workforce. Mac?
And Scott, Block CEO Jack Dorsey blaming those 4,000 job cuts on AI, and Wall Street is all in on that narrative. Morgan Stanley upgraded to overweight. Goldman said the cuts appear concentrated in engineering roles rather than revenue generating positions. It raised its price target to $90. The stock's at $62 now. And Wells Fargo called the quarter chock full of positive surprises. And what makes this harder to dismiss as AI washing is that Block isn't in trouble. Cash App gross profit surged 33%. Full year EPS guidance crushed estimates. So this is a profitable business, making the case that it can run on half the people. And this cut takes headcount back to 2020 levels. But the efficiency target is new. Block wants gross profit per employee at 4x pre-COVID levels all driven by AI. The Autodesk CEO told CNBC earlier today that he's also looking to increase that same metric, Scott.
Uh-oh. The copycat wave, you just heard what you said. The Autodesk CEO said he's looking to do the same thing with that metric. And here's the part that should keep you up at night. It's not just Block anymore. You heard her say Autodesk. There's getting ready to be a wave of copycats. WiseTech cut 2,000 workers, 30% of their workforce. February 25th, stock went up 11%. Maersk cut 1,000 corporate workers, 15% of their corporate staff. Stock went up 7% yesterday. On the same day they announced layoffs, Kuehne+Nagel, the giant shipping company, expanded their layoffs from original 1,000 to over 2,000. The pattern is clear. Every company that cuts workers and cites AI gets rewarded by Wall Street. Every single one of them. And Dorsey, the CEO of Block, he predicted this. He said within the next year, most companies will reach the same conclusion and make similar changes. Now, 49,000 global tech job cuts in the first 2 months of 2026 alone. The World Economic Forum found 41% of companies worldwide expect to reduce workforces because of AI in the next 5 years. I want you guys to type copycat in the chat if you think your company is watching this playbook. Type copycat in the chat, okay? You know, if we're talking about the data, many people who just go about their daily lives don't even know this is going on, okay? But the people who are watching the news and watching business shows and watching shows like this, they know what's going on. This is a lever that CEOs and leadership is going to pull if they want to increase their stock price. It's for the shareholders, right? That's what happens. This is a copycat playbook. Now, I want to do something different for a minute real quick, because this story is not new. This has happened before. Every generation. Okay? Every generation it happens. Think about this. I wasn't alive, but I did some research. In 1910, there were tens of thousands of lamplighters in America. That was a job, a lamplighter. Their job was to walk the streets every night and light the gas lamps. Then electricity came. And guess what happened? Those lamplighters were gone. There were switchboard operators. At one point, millions of women worked switchboards connecting phone calls. You guys saw them in movies and so forth, where you just see all these switchboards and people plugging in things and so forth. Then automated switching came, and they were gone. There were elevator operators, ice cutters, typists in typing pools, bowling pin setters. These were real jobs, real people getting real paychecks, gone. And you know what they all had in common? Every single group said the same thing. They will still need us. The machines cannot do what we do. This technology will never work. Sound familiar? Block's 4,000 employees are this generation's switchboard operators, customer service reps, fraud analysts, QA testers, data entry. Those are the new extinct jobs. But here's the thing. The lamplighters who became electricians, they got richer. The switchboard operators who learned computing, they got promoted. The typists who learned word processing became executive assistants. Adaptation does not just save your career, it upgrades it. And let me give you proof from our own community. In our Discord on yesterday, one of our members, no formal coding background. Matter of fact, I think he drives a truck. He is teaching himself to build full applications using AI tools. No boot camp, no degree, just building. Figured out developer editing features like content creation, And he figured a lot of this stuff out using creators on YouTube. He figured things out that people said on YouTube didn't exist. He dug deeper. He found them. He built with them. Another member started stacking a snowflake certification on Coursera. Another one used AI tools to create original content. A gospel short film. Not coding. Creativity powered by AI. That is the difference between the switchboard operator who became a programmer and the one who became a footnote. I want you guys to type adapt in the chat if you are ready to be on the right side. This AI boom is going to create a bunch of winners, guys, but you have to take advantage of it. Now, the Roosevelt Institute just dropped data that shows you why this matters so much right now. Youth unemployment ages 16 to 24 has been above 10% and rising for 6 straight months. The share of workers unemployed for 6 months or longer is tied with the pre-2009 record. In the Michigan Consumer Sentiment Survey, people are more afraid of losing their jobs than at any time since the survey started tracking in 1997, except for 3 months during the Great Recession. If you lost your job in the last 6 months, the data says you are in the most competitive reemployment environment since 2009. Do not just apply. Network aggressively. Build AI skills. Target sectors that are adding jobs. Defense, energy, healthcare, trades, AI infrastructure. The days of landing a comparable role in 4 to 6 weeks are over for most white collar workers. All right. So if this is a reality, if this is the reality, where's the money actually going? Where should you go? I'm going to show you. Stay with me on this next segment, okay? Told you guys it's going to be a good show today. Where is the money going? Well, here's where the capital is flowing right now. Lane 1, defense and aerospace. This is not a 1-week trade. This is a multi-year hiring story. The weapons, aircraft, and munitions is being used right now. And guess what? They need to be replaced because we are in war. Those are contracts measured in years, not weeks. The top 5 defense contractors employ roughly 680,000 workers at the end of 2025. All 5 have thousands of open positions right now. Systems engineers, 100 to 180,000. Cybersecurity engineers, 120 to 200,000. Intelligence analysts, 85 to 140,000. Program managers, 120 to 200,000. And here's the key. A security clearance is the single most valuable credential in the current job market. If you are a veteran, your existing clearance makes you immediately employable. If you are not, defense contractors will often sponsor clearance investigations for high demand technical roles. It takes 6 to 12 months, but starting now positions you for the hiring wave that is building. Now, lane 2, energy. The 2026 Global Energy Talent Index shows 48% of oil and gas workplace in the workforce is over 45 years old. Only 19% are 25 to 34. They literally cannot fill positions fast enough. You got field engineers, you got refinery operators, you got LNG economics, you got pipeline logistics, energy storage engineering. All are critical, all paying well. And then you got lane 3, cybersecurity. CrowdStrike, they report earnings tonight after the bell. And there are 3 big narratives converging. Number 1, Cybersecurity stocks crashed 5 to 11% in late February after the new AI security tools launched. Claude Cowork. You guys remember that? Number 2, the Iran war is driving wartime cyber demand. Active cyber operations between the U.S. and Iran right now. Number 3, Zscaler beat on earnings last week, but still dropped 12%. CrowdStrike needs both a top-line beat and a strong guidance. If they deliver, cybersecurity gets a rally. If they miss, the pressure continues. Either way, cybersecurity talent is in demand, regardless of which stock goes up or down. SOC analysts, 70 to 110. That's a lot of money, guys. A lot of money. 70,000 to 110. Threat intelligence analysts, 90 to 140,000 a year. Cloud security engineers, 120 to 180,000 a year. That's a lot of money. It's a good job. Good career. Now, skills actions for this week. Google Cloud Get Certified 2026. The deadline to apply, it's March the 11th. That is 8 days from now. Completely free 2-day virtual training. Free exam voucher worth over $200. First 500 who pass get a $50 bonus. cloud.google.com/innovators/get certified. Check it out. CompTIA Security Plus, about $400, recognized across every defense contractor. Your ticket into the award economy. Google AI Professional Certificate launched on February the 18th. About 10 hours to complete. You got companies like Walmart, you got companies like Deloitte and Verizon already using this certificate to train employees. One of our ladder climbers is already stacking Anthropic courses, starting the MCP server course. While people on social media were panicking about Anthropic in the Pentagon, this person said, I'm starting the course tonight. That is the culture in this community. While people complain, ladder climbers certify. Ladder climbers build. Ladder climbers help each other. I want you guys to type Google in the chat if you are applying before March 11th. Type it in the chat, okay? Now, real quick, we just covered a whole bunch of data, ISM stagflation signals, the block copycat wave that will continue, the defense hiring machine certifications deadline. If you are thinking I need a plan, this is exactly what this 2026 career protection playbook is for. It is free. It shows you your risk zone for AI automation, the 5 skills that actually matter in 2026, a 30-day quick start action plan, a weekend action plan with 5 specific moves, plus the Daily Climb newsletter delivered Monday through Friday at 11:30 a.m. Central. The professionals who survive 2026 are not waiting for permission. They are building career insurance right now. Link is in the description. Download it today. Let me tell you something else. We just talked about how ISM prices jumped 11.5 points in 1 month. That's a lot. We talked about how 41% of companies plan to cut workers because of AI. We talked about how the Roosevelt Institute says this is the worst job search environment since 2009. The career protection playbook shows you what to do. The Career Accelerator 90 is making sure that you actually do the work. 12 weeks, small groups. Maximum 12 people, weekly Saturday coaching calls at 10 a.m. Central, private community, over 30 templates and AI execution agents. We have a few spots left. We start March the 14th, nextgenheights.com/accelerator. Link is in the description of that too. And if you want the complete strategy breakdown, the weekly intelligent briefs, the job market analysis, the career strategy sessions, that is the Daily Climb Patreon, patreon.com/Black Heights. Our members got the energy analysis, the block layoff breakdown before this show even aired because I sent it on Friday. That is the kind of edge that matters. Join us. Link in the description, okay? All right. What's coming in the week ahead? So far, this show, we covered the market split, the ISM data, the copycat layoff wave, the opportunity lanes. Now, let me show you what's coming the rest of the week, because there are data bombs dropping every single day. Here's what's on deck. Tonight, CrowdStrike, they report after the bell. That number could change everything for cybersecurity. Best Buy reports before the bell, consumer spending signal. On Wednesday, ADP employment report, consensus only 55,000 private sector jobs. ISM services PMI, that tells us how the services side of the economy is holding up. And Broadcom earnings after the bell, AI chip demand beyond NVIDIA. We want to know. Broadcom is booming and they crush it. AI, it ain't slowing down. The infrastructure side of it's not slowing down. On Thursday, Costco quarterly earnings. That's the consumer resilience test. You know, many of you guys shop at Costco. I got a Costco membership. I haven't gone to Costco in a while. My wife orders from Costco and it has it delivered at the house. But consumer resilience tests for Costco quarterly earnings and weekly jobless claims. This is the first reading that could capture post-block layoff filings. Watch that number. And Friday, the big one, non-farm payrolls, the February jobs report. Consensus is just 60,000 jobs, down from 130 in January. If the number comes in below 40,000, recession fears dominate the narrative. If above 100,000, the soft landing story gets a lifeline. But here's the thing that I want you to understand. February's report will not capture the block layoffs, and it definitely will not capture the Iran war impact. The labor data is backward looking, while the risks are forward looking. Also today, 3 Fed speakers, New York Fed Williams at 9:55 a.m., Kansas City Fed at 10:10, Minneapolis Fed, Kashkari at 11:45. Watch their language on oil and inflation. If they sound hawkish, rate cuts are dead. Okay? They're going to be talking today. I'm not going to watch, but I'm going to get the report. I'm going to pull them and see what they say. And I'll report back to you all on tomorrow. If you want us to break down those earnings in the jobs data in real time every single day this week, the Daily Climb Patreon community gets the analysis first. Okay? They get it first. They get it first by watching this show. All right? Patreon.com/Black Heights. Link in the description below. A lot of data today. Lots of data. We can wrap this whole thing up though. Okay? 3 takeaways from today's show. Takeaway number 1. The bifurcation is no longer a theory. Monday proved it. Defense stocks at record highs, cruise lines crashing 10%, 2 economies, 1 paycheck. Which side are you on? Which side are you going to choose? The side that you choose is actually a choice. Takeaway number 2, production without people is confirmed. ISM says factories are expanding, orders are strong, backlogs at 4-year highs, but employment is contracting. And the block copycat playbook is spreading. Every company that cuts and cites AI gets rewarded. This is the new normal. Takeaway number 3, defense, energy, cybersecurity. Those are the 3 lanes hiring aggressively right now. Security clearance, CNC certifications, AI skills. Those are the 3 credentials that matter most. Google Cloud deadline is 8 days away. Move now. I want to share one more video for you guys, or with you guys. Seems like I end this show with the same video, but check it out. You need to hear it again.
Surged 24% in extended trade after the company announced plans to lay off almost half its workforce. CEO Jack Dorsey pointed to AI, saying intelligence tools have, quote, changed what it means to build and run a company. Changed what it means to build and run a company.
AI tools have changed what it means to run a company. Let that sit with you. You saw the playbook. We've talked about it today. We've talked about it on yesterday. Make sure you are building your skills. On tomorrow, CrowdStrike earnings breakdown, oil price tracking, any overnight Iran developments, and we will have fresh ADP jobs data on Wednesday morning. If you cannot catch the live show every morning, make sure you are subscribed to our newsletter. Every weekday, you get a full recap of everything that we've covered. The data, the stories, the strategies delivered straight into your inbox at 11:30 a.m. Central. Link is in the description. And if you found this show valuable today, hit the subscribe button. Turn on the notifications so you never miss a daily climb. And share this with someone who needs to hear it. Someone who's in tech, someone who's in customer service, someone who is wondering if their role is safe. Share it. Don't be stingy with the information. Guys, and just a reminder, I send a newsletter every weekday breaking down exactly what these business moves mean for your career. It's just data. One of our viewers said they watch daily for the real deal in plain language. Vital information for small business owners. That is what this newsletter delivers. Link is in the description of this video below. I didn't say that. That's what she said. Okay? Make sure you like this video. Like it right now. Subscribe to the channel. Say what's up to the people in the chat, the ladder climbers. We will welcome you. We know you're watching this show. I have all kinds of people watching this show. People who said they don't watch the show, they watch the show. I know it. Go ahead and make sure you subscribe to the channel. Don't just watch because you want to get the data. I'm giving it to you for free. Watch. Contribute. Have conversations in the chat. I saw many of you guys having chats about investing. Great investor strategy. You're getting this information right away. You already hear what the analysts are saying about Block. I'm not an investor. I'm not telling you where to invest. I'm not a financial advisor, so I can't tell you where to invest. But you can use this data to make those kind of decisions. It's all data. No feelings. Hit the like button and share this with somebody so that we can reach more people trying to navigate this economy. Also, type climb in the chat if you are going to take action today. Could be just reading another article on AI, using our AI, scheduling something, adding a new feature, understanding something. Type action in the chat if you're going to take action today. Okay? The market does not care about your feelings, guys, but your strategy determines your future. Lamplighters who became electricians, they got richer. Switchboard operators who learned computing, they got promoted. The ones who refused to adapt, they became history. Which one are you? Your move matters. Keep climbing, okay? Guys, go out here and have a fantastic day. I got a call with my man Life of Cam, and I got to jump off with him. They be pulling me into meetings, man. But guys, have a fantastic day. Crush it. Before I go, I got to see who's all in the house. Got to say what's up to my peoples. Darren Smitty said action. AOC says climb. Big Sug says climb. Aquarius says climb. Big Sug says history maker. Yep. The Life of Cam says climbing. We're making it happen. We got our call tonight too, our content creation. It's going to be a good call tonight. 2009 Hollywood, good to see you. ARDS7 KC, good to see you. Topaz, good to see you. Go out there and have a fantastic day, okay? I appreciate each and every one of you, and we will see you all tomorrow. Take care now. Bye-bye.